What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 6th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to get to a very root question, and that is what's going to lead Bitcoin higher going into 2020 and 2021? And I'm not going to sit at the surface and say, oh, it's things like BACT or Bitcoin ETF. I actually want to get to the root thing that drives pretty much any given market, and that is liquidity. So we're going to be diving into that and much more. It's going to be a really interesting episode right after our quick sponsor. Our sponsor for today's video is CoinDeal.com. CoinDeal.com is one of the largest crypto to fiat exchanges in Europe, and they're giving away over 90% of all their tokens to users who register on their platform. Whereas most projects only give away 5 to 7%, this is a massive giveaway for early adopters of the platform. It doesn't cost anything to register an account, and you can sell or hold onto the tokens after it launches. Check out the link in the description for more info. Alrighty, everyone. So as I talked about at the beginning of the video, I'm not going to be talking about these kind of headline pieces that supposedly drive Bitcoin's price. I want to talk about the liquidity that may or may not be driven by them. That's really what brings markets higher and also can drag them lower if liquidity flows out. It's inflows and outflows. I've talked about this a little bit in the past when it comes to the stock market, and I want to talk about it when it comes to cryptocurrencies because it's the same exact thing. There are people who enter into markets and exit, okay? So we'll build into that as we go throughout the video. So taking a look here over the last 24 hours, most cryptos are in the negative zone at the moment as Bitcoin has closed down on some of its gains. The funny thing about it is, like I read this morning, it was like Bitcoin crashes back down. Now, of course, all the headlines are blowing it out of proportion. Like Bitcoin crashes back down to 12,500. I'm like, that's funny. That's where it was when I went to bed. So it made a move overnight. In that case, I was kind of realizing that. But in the sense of overall market cap, we're really not changed that much, down 5 billion from the relative peak here over this week. And again, looking like we might be on course to potentially break through the previous two highs, the general line of resistance that gets formed both in market cap and in Bitcoin. I'll talk about that as we go throughout the video and we take a look at the TA side. Bitcoin dominance, though, still climbing up all the way up to 68%. Looks like we're well on our way towards 70% market dominance for Bitcoin. We'll have to see how it handles around there, but it does look like we've obviously cleared through the resistance here, guys. No doubt about it. Gotta say, a little bit of a shocker to me because the chart was looking quite exhausted. But again, we might still be getting a good flush on the altcoin space right now. Seems like most of the market leaders are not selling off too hard against Bitcoin, but they're definitely not holding up strong. All right, so let's go ahead and focus in here on the current chart for Bitcoin. Now, if we take a look in the sense of the last 24 hours, it looks like we've gotten a rejection here after the multi-day uptrend that we had in Bitcoin. Seems like they had relatively low volatility, nothing crazy in the sense of volume. Really good last bit of volume here on the last day here until we finally turn red. Now, what do I think is going on here? Well, I want to take a little bit of a longer term look here to explain what I've got on my chart. So taking a look from the bottom of the market here, where we landed here on the 200 week, again, double bottom here to confirm that we're likely for a reversal. We got that. From the absolute bottom here to the absolute top, this is what's basically what's known as the Fibonacci Fan. And you can basically get some ideas as to where price can find support. And that's exactly what happened here on the week of July 24th. If we take it to the daily, we can see that we've had direct support on that fan. That's where we got the bounce off of. And after that, we had a nice uptrend. But what I think is coming into play here is that we're now getting the line of resistance from the two previous highs, which gives us a good measurement for where resistance is going to be, hitting price right here. So what's really happening here? What's actually coming into price here? Well, I think what we're getting, whether or not you want to use the Fibonacci fan or not, is we're getting a general line of support here in price on the bottom side, and then also a line of resistance. We're getting a coiling of price or a wedge in this case. So a very common TA signal for breakouts or breakdowns. It means that price is going to coil in and eventually make a move. Now, I think most people would probably agree that with the kind of momentum we've had this year, it's going to lead higher. Who knows? I can't say that we won't have a correction to one of these lower levels on the fan or lower levels in previous support for Bitcoin. Some people believe we're going to go down to 6K. Heck, I would love it, but I don't see it really happening. So again, with the momentum that's going on right now, I think the bulls are in favor right now with the kind of scare that's going on in equities, as well as other markets across the world and currency markets, things of that sort. I think, what was going on in China yesterday, in the sense of the Forex pair and the devaluation that was going on, sheesh. I mean, that would get me concerned as someone who has money in the Chinese yuan, personally speaking. And it's a large currency, you know. Now, as we'll talk throughout this video again, we obviously know the macro picture here is concerning. This was an indicator. I think this is just another way of looking at it. We talked about the Purchasing Manufacturing Index, which is a traditional market indicator for the kind of state of manufacturing for global economies. And you have pretty much all the major nations in the world reporting their PMI. I have no doubt that there can possibly be some decent manipulation with most indicators. But the thing about the PMI, to my understanding, is that the PMI is a survey. And the survey basically asks manufacturers how they're feeling. You know, how are they feeling about demand for their exports, right? You know, are people buying their products more? What are the costs of goods that you're producing? Is it profitable? What's your margins? And all kinds of different questions that are very relevant to the manufacturing sector in the global economy. And right now, the PMI, ever since 2018, has just been on an absolute spike up to the upside. And going into 2020, we're rivaling levels that we saw back in 2011, that we've obviously seen in 2008, and during previous split ends in the past, such as the peak of the dot-com bubble in 2000. So this is definitely concerning. The PMI, again, some people say is not as relevant, but because of the fact that we're, you know, exiting out of a manufacturing economy, but we're manufacturing more stuff than we ever have in the sense of the global economy. So manufacturing is still very relevant. We're buying more products, things of that sort. And this is measurement of the amount of nations that are in basically below 50 point territory. And the reason why that's important is it means that the broader economy is getting less confident, right? It means that most people are not confident that there's going to be growth. And that's happening in over 70% of nations here. And not to mention as well, this is coming at a time where we've talked about the $14 trillion negative yielding debt crisis, which is only going to balloon bigger over the next few months. It'll be interesting to see where that goes by the end of this year. And if we think about how quick that's grown, I mean, to think we could easily probably get, you know, 15 trillion by the next month, and not to mention if we keep expanding, you know, we could easily go on to larger numbers, around 18 to 20 trillion by the end of the year. Who knows? We'll have to see. I'm not, you know, rushing it, but at the same time, I think it's already a problem as is. So as I mentioned, again, there's a lot of these surface level things. I think honestly, Bitcoin ETF backed demand, you know, things for these kind of interest in Bitcoin, those will come in time. I'm glad that we're pushing that. It's these kind of underlying factors that have pushed things. But even deeper than that, we have to talk about a very real thing, guys. And that is that liquidity drives markets. So when we talk, for example, about things like Bitwise that came out of the Bitwise report that they made for the SEC back a few months ago, actually, oh my God, it's almost been a year. I don't know, it's been a while. But yeah, no, the Bitwise report that came out talking about the fake Bitcoin volume that's prevalent in the cryptocurrency market, with 95% fake volume in the crypto space. You know, what does this tell us about Bitcoin? Well, it tells us one thing for sure, and that is the fact that if we take a look at the current volume behind Bitcoin, we don't need $23 billion in liquidity for Bitcoin at this current price range. So this is actually really good news. This means that, you know, if we were to just, you know, kind of put some perspective here, let's just get some clarity on numbers. CoinMarketCal, as well as any coin aggregate site, for the most part, is probably not going to report the absolute real volume, because some people like to see this wide range of volume. Again, I personally, I don't, but it's you know, it's just different public opinion in this case. Anyways, let's rough this off to $20 billion, you know, let's say, give or take, for Bitcoin. If we, you know, obviously get 95% of that as fake volume, we're going to come out to about $1 billion in daily volume, right? So if $1 billion over a $200 billion market is the current liquid volume we have, that's highly significant. That's a good amount of volume. That's actually a pretty decent amount here, because it's important to understand when we take a look at, for example, what's known as daily turnover. This was actually talked about in the Bitwise report, that between Bitcoin's market cap as well as our spot volume that we're getting on these exchanges that are liquid, that we can guarantee are coming with liquid volume, we're actually getting a relatively decent turnover. That's how you measure. You basically are taking the spot volume and dividing it by the market capitalization of your asset. It's very similar to kind of like NVT in a sense. It's a measurement of like, okay, how much real genuine liquidity are we trading in this market to get this value? So obviously the liquidity that's trading today is almost 0.4 in this case, or through 0.39. That's defining the $70 billion valuation back when the report was done. But the market has grown. And in fact, this ratio has actually increased. Not to mention, I would say that Bitwise is a little bit over the top in analyzing this. I'd say that there's actually a little bit more liquid volume coming in, just to be fair. I would say that back at this time period, it was around 350 to 400 million, because they completely discounted a lot of the Asia exchanges, just because there might be a little bit of excessive market making in their exchange. So again, even taking either one into account here, we can see that there's not much money that's needed to get Bitcoin to where it is. And this is actually the kind of hidden truth that a lot of people never learned about in the previous cycle. It was actually a very minimal amount of volume. What seemed as if, was the topic that everyone was talking about, little to no one actually owned at the time. It was a very select few people who owned Bitcoin or actually got exposure to cryptocurrencies and were buying in any significant kind of volume. So that's the thing to take into mind here, guys, is that overall with this Bitwise report, this gives us a very good insight into the fact that, we don't need much liquidity to come in. So if we kind of go back to the macro picture here, sorry, I'm a little bit scattered on my charts, but if we take, for example, this topic of negative yielding bonds, let's say, for example, that the indicator gets up to 15 trillion by the next month or two. There's $15 trillion in negative yielding bonds. 1.5 trillion, 10% over the next year, exit out of negative yielding bonds as fixed income investments, and they're looking for something to put their capital into. And maybe, just maybe, some of that, even a fraction of that 1.5 trillion, is crypto. I'm not even talking about a whole $1.5 trillion going directly into Bitcoin. Let's just say even a few $100 billion or $10 billion of that money goes into Bitcoin. That's huge liquidity. That's new inflows. That's not people circulating money between Bitcoins and altcoins. No, that's real, genuine liquidity coming in. All they need is an entry. The moment you provide them a Bitcoin ETF, the moment you provide them easy access to things like BACT and also Ledger X, and then also entries like Fidelity, and I think with time, as time progresses, you're going to be getting other major brokerage platforms that will allow for this. You are going to allow so much capital to slowly push in that's going to be able to fleet these traditional vehicles. The more the Fed mentions it even as a speculative store of value, whatever, the more it gets legitimized over time. I think we already know Bitcoin is legitimate and it's been working, and it is what the ultimate store of value should be, at least to what is possible in today's world. This is really exciting stuff, guys. We know that there is not much liquidity needed. What happens when a black swan event happens? What happens if stocks continue to sell off like they are right now? That's the stuff that I kind of think about at night. It's what keeps me up at night. And it's what keeps me from stressing about like $300 or $500 moves in Bitcoin, right? Because I know right now, those are minimal liquidity shifts in markets. It's whales propping up the market and dumping it, trying to trade against one another on BitMEX, on leverage, to make a quick buck against one another. See, I'm in this for the long term, guys. I really genuinely mean that. I am most exposed to cryptocurrencies more than any other asset class, as we talked about in my previous video when I was talking about the stock market. This is an immense opportunity in my mind, personally. And you guys are going to have to determine that for yourself, how much exposure you want to it. But I think the sheer fact that this market is driven by a fair amount of liquidity, similar to gold in this case. I would say this ratio is back up to a very similar level to gold, if not higher. Even if we take that into mind, it's got good liquidity, but it doesn't demand much at the moment. What happens when the liquidity starts flowing? What happens when the inflows kick in as fear continues to rise? That's what's on my mind, guys. I hope it's on your mind too. And let me know what you guys think about this analysis in the comments down below. If you guys like the video, drop a like. I'd really appreciate it. Every little bit counts, as well as any comment. You guys' engagement always helps out on the channel. And if you guys want to support the channel in any way, we've got lots of links down below in the description. You guys can go ahead and check out if you want to support the channel. Probably check out some pretty cool projects and companies as well. But until the next video, guys, thank you all so much for watching. I hope you all are having a wonderful day wherever you are, and I'll see you all in the next one. Stay tuned.